Good morning, everybody. All right, so we got a little bit of a range expansion yesterday. Looking at the S&Ps, we'll see the others. Um, so I wouldn't call this extended yet, but where we get concerned of any kind of a substantial pullback. But it's a little more extended than it has been when it pulled back in the past or went sideways. And we've talked about this over the last couple of weeks, how this market, you know, kind of talk about, there's these sayings about the market that at times the market climbs a wall of worry. Oh, what does that mean? I've probably heard it for as long as I've been doing this. Um, it's unless you can relate some kind of adage like that to a price pattern, because we're price pattern traders. What does it really mean? How do I use any information that is given to me? And so one of the things that I've spoken about over the last, I guess, couple of months, I guess going back from, over here, was the fact that the market goes through these resting periods and then makes little headway. Where you would think, like over here, where it retested, okay, there's at least a 4 day move, and then it goes sideways. Made sense. And then you might recall a conversation of, okay, it gapped up here. What are you waiting for? Let's get moving. And then another 3 days and up, and then a pullback right away. So point being, this market, the way it acts, there's a lot of uncertainties out there, which we all have been inundated with. And so I'm not going to repeat them. And so it pulls back and starts resting again. And then buyers on the dip. And now you get this acceleration, bit of an acceleration to the move, and get a little further from the 20. And looking at different price patterns over the years, this is not that extended from the 20. So one of the ideas or concepts that we spoke about this week was about, and especially in the advisory letter, I spoke about, okay, this market might be ready to make a meaningful advance. And so now, while this is a little extended, historically, it's not what I would say, wow, this is like climactic, not even close to climactic. But now we've got this range expansion bar. And today is just beginning. Why is the red line up there? Because every day starts with the first reference point of resistance being the prior bar's high and support being the prior bar's low. And then we see whether we can get above the high or below the low. So far, we're just trading near the high, going sideways, and looking at the hourly chart. That's a bullish pattern, and what we refer to as a bull flag, where you get a momentum move up, and then as it pulls back, there's very little support underneath here. You got these overlapping opens and closes here with a little bit of support, but what we look for in a pattern like this is for it to form a pivot. And once it forms a pivot, we have a reference point where buyers should step up again. And it poked under it a little bit. That's all fine. It's okay. And then another pivot. So now you've got this flag that has completed its formation. And as it moves up, it should take out the high and continue higher. So that's something that we'll be looking for to see if it actually happens this morning. And so the high is resistance up there, but based on this pattern, it should take it out. We shall see. The range expansion bar after big deal, 3 days up, 3.5 days up. Again, not extended, but it moved up with less of a worry, right? Less of a worry, let's say. Whereas with this, the bars were overlapping each other, a little sideways, bottoming tail bars. It breaks out, it comes in again, sideways again. And so one of the things you take away, Dan and I always try to provide some nugget of education that you could take with you. So one of the ways of getting on board something like this is a correction bar, and which would be a bar like this that breaks under the lows. So we often look at pullback type of patterns, right? This isn't a textbook kind of pullback pattern, but sometimes you don't get pullbacks. So correction bars, which take out lows, especially if they're range expansion bars. So we talk about bottoming tail bars. And then as we break those down in our courses, well, this is a bottoming tail bar and this is a bottoming tail bar. What does one mean versus the other? Meaning, well, a bottoming tail bar like this, that's a little narrow range, is not as powerful as a bottoming tail bar that's a range expansion bar. Like this range expansion bar, those correction bars, as they get bigger, provide us with an event that says, hey, we can buy that above here with a stop below the low. And because it's a bigger range. It would be similar if we had a wide range bar and we could buy below that and say, well, most traders are looking to buy above or below the narrow range bar. And that's something that had a higher degree of working back in the 90s, and where you could buy above the high of a narrow range bar and put a stop below the low. You do that today, you're likely to lose money, the death of 1,000 razor cuts. It doesn't work so well anymore. So these range expansion bottoming tail bars, or sometimes they become 180s, right? The whole idea is that it goes down and it comes back up. Sometimes it looks like what we call a 180. Sometimes it looks like it could be a gap down and a reversal. In any event, different pictures mean the same thing. So now we've got a range expansion bar. There's no resistance, but getting a little extended, which is kind of suggestive. Maybe it needs a little bit of a rest here. Rest could be sideways, rest could be pullback, and so on. We've got the Fed chair going to be speaking here. So there's some uncertainty what's going to come out of his mouth. And so we've got this whippy price action that's going on. So as we go into the day, we take a look at multiple time frames. We look at support. We look at resistance. We look at extension from support, relative strength and weakness, and all of that stuff gives us a bias as to, what do we believe is going to happen today? And then we just day-to-day see, how's it working out? Do we have to change the bias? That's the process. So we do the same thing. We go to another market. Now that jumps out as a range expansion, wide range bar, suggesting the end of a move. Now, when I say end of a move, it doesn't mean it's going to crash. It just means it's ready to rest. Now, that's the bias. That's the thought when we see a range expansion bar that has moved away from support. It's been running for a few days, the more of a fluid type of a move like this. And then the range expansion bar, it's at 12,000. That's a big number. That makes sense. So probably bias being a go nowhere kind of a day. If the market is going to correct further, typically buyers need their confidence shaken to get them to sell more aggressively. This is not going to shake their confidence at all, but it begins to build a congestion area that a pullback could begin from. And the wide range bar creates what we call a void, which could open up for a meaningful pullback intraday or over the course of a couple of days, which still would not violate the uptrend. So we put that in perspective. So even if we get a red bar, right, a red bar doesn't break the trend. So let's continue. And here's the Dow, which is doing what the others did before with the congestion after moving up, after the resting period. So I don't know where this is going to go. Yes, this was yesterday's analysis. Which way is this going to go? Where it had this range and it broke out above and it didn't get very far before it pulled back into, the top of the congestion there. What was resistance becomes support, blah, blah, right? And pull back, lower high, lower low, range expansion bar. Um, Dan's having some technical issues there. It could be fat fingers too, F Trader. Anyway, he'll get it fixed. So consolidation here, and well, there's some gyrations going on here, right? Look at that wide range bar on the 5 here, and just wiggling inside of here. So we'll see what happens now. Like I'm just so I don't use this platform here. Well, I use this platform, but on a different computer during the trading day. I'm just talking to you here. So, but this is what I would be doing, right? It's like there's my resistance reference point. Can it get above it? This pattern suggests that it can. Right? It's the same analysis. It's a different overall picture here than I think we were looking at the S&P. Go back to that, right? This kind of lower high, lower low flag kind of a pattern suggests it should get above it. Now, the wide range bar is a concern, but what's happening, Dan? Dan is like technically I don't know. Anyway, Russell, sloppier kind of bullish pattern going sideways. Now it's going up. Maybe today's the day that Russell can really kick it in. We'll see. Need more information. Bonds. That's a good word, Alex. That's a very nice way of saying it. I've known Dan for 20-something years, and when it comes to computers, Dan has got a handicap. So retest here with bottoming tail bar, W type of a pattern, which bonds are going to go up, interest rates are going to go down. The market going to rally here where bonds are going up like that. If they're going to continue to go up, that doesn't make sense. So I'm a little uncertain here. I mean, as to say, okay, the markets are perking up here a bit. However, bonds are starting to move up. I've got a wide range bar over here. Today becoming a wider range bar? It could, but the wide range bar, the extension, 12,000. I think should be a little apprehensive about this continuing much further without some type of a resting period. Anyway, oil. This has got to be one of the longest coma periods, and I know I have to change this contract. Let's just go like this for now. Right? The longest coma periods of a market. I mean, I wasn't using this because of this. Remember this crazy time where oil was like undervalued or worth less than was way down here. What happened that time? Anyway, so maybe this is going to finally start to perk up here. We'll see. Kind of come out of that range. And gold. Right, we looked at this and I thought, well, maybe it's got to come down here. Well, no, it didn't. It poked under the low and came back up again. So gold is looking pretty good. Well, it's even moving here. So I think gold is probably going to be a better go-to on the long side, even intraday, than the equities should be. And silver. Silver looks pretty good. It's at resistance, but so these look like they're going to be okay. And that's it. So Dan's ready to come on. Jose on YouTube asking about airlines, but they were garbage yesterday. Intraday. So everybody got to understand bottoming patterns are treacherous. They look like they're going to the moon and they fall back to earth. It's just what a bottoming pattern does. So just keep that in perspective. Even when you get these big moves, it's easy to think, oh, it's going to the 200. Sometimes you get things that happen, but you know what? This is typically what you get as a bottoming pattern. And the longer it does this, and as I'm looking at this, just take note to look at as I'm looking at this. Right? So you got that big move and it comes back down to earth. And it's forming the beginning of a more complex head and shoulders bottom. Now, of course, this, that little perk up off of the low and these type of pullback patterns, which everybody likes, which work great when you get them in uptrends, when you get that same kind of hook pattern, and especially this one where they have deep pullbacks in bottoming patterns, they don't do this historically. They do this, and then they may eventually go up. So you have to be patient and let them wiggle. Money management, of course, needs to be aligned with that kind of a pattern. So there you go. All yours, Dan.
All right, thanks. Good morning. Yeah, I'm watching the futures here bounce around, and I was listening to Kramer. I actually like Kramer's 9 a.m. commentary pre-market, and he's shaking his head too. Yesterday, and Faber, the two of them were talking. They're like, they're both like shaking their heads of the advance yesterday. Kramer saying, yeah, it looked like just a buying panic. They were making fun of Facebook, saying Facebook had bad news. Kramer said they got a slap on their hand, whatever that means. I guess from there, I don't know. I don't care. They're fighting with Apple and the App Store and privacy settings, all that kind of stuff. And he says Apple goes up 7%. And then Cream, they're like, really? It went up $50 billion in one day? So anyway, and then he says, well, Powell's not going to want to disrupt that. And I was thinking to myself, well, why not? I mean, what the heck is Powell's job? Ain't to feed the punch bowl to keep the market, just rallying forever. And, you heard me saying about the market. Yeah, of course we're going to be up today. It's up, 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 up. So the market's just programmed to, that's the phase we're in right now. You got to take it or leave it. It's crazy. So we closed very bullish. Now we're breaking out pre-market up here another $1.50. It's still strong until it's not. So anyway, our opens here, everything looks fine. Just ask me if you have any questions on anything. Otherwise, Amazon, I was looking at that as a directional right there, and the spiders at 11 a.m. And I was waiting for the afternoon, and the rocket ship took off, like Pat called it, a speedboat, turned into a speedboat. Amazon and that. Dunking's down. We have a put spread on this. The NBA decided to go on strike. BLM, and I don't know. That's a whole nother issue, and now that's going into other sports, whatever. I'm not going to even approach that subject. But yeah, I mean, of course it's going to affect dunking. Their whole business is betting on sports. And if you're on strike, well, guess what? You got nothing to bet on. So yeah, I expected a gap down. We're short the 35.50s. So as of now, we're okay. We still just got to sit through this. Big C. Big C is gapping up $2. Recent IPO. These range expansion bars, I'm not sure how much longer that can go on like that. Yeah, Greg, I was here in the tail end of your bottoming patterns. We need to do an MT live on that. myself a note. You said, all right, Cisco. Yeah, I mean, I like the gap reversal finally. Yeah, I mean, here's another example of a bottoming pattern, right? A bottoming pattern, oversold, going sideways, and we need a something something bar. Yeah, that would, it's for our MT live. That would be a fantastic example. Let me write myself a note on that. Bottoming and gap reversal. That's a good example. Let's see, floss 3152. Yeah, it's gapping over the high. Because you can put it in a thumbnail, see how it sets up. William, I just talked about Oracle. Oh, no, I didn't. My bad. That was Cisco. Oracle 5740. I don't see a gap. I see it flat, but it's a wide range bar to resistance. So I really don't see anything to do there. Disney is much better setup than Oracle because it was a 1, 2, 3, and then this closed at resistance. So you maybe 30-minute high, maybe, you know, put it in a window and see how it sets up in the first 30 minutes. Yeah, that hurricane also. Yeah, that's horrible news. The Arnold, your drop down. Yeah, that hurricane, the paper said it either tied or beat a record since 1851 of a Category 4, hitting Louisiana like that part of the Gulf. That's horrible, horrible. And in Katrina, which devastated New Orleans, was Category 3. So yeah, we live in hurricanes here in South Florida, so I feel bad for anybody who gets the wrath of those things. LH 171. So we can see if it stabilizes here at the 200. The weekly is actually still in an uptrend. MU, William, it's gapping down 4420 from a sell setup. It's in the semiconductor sector. This has been huge relative weakness. So you can watch it, maybe 30-minute low, but I have no interest in buying that. Interesting, USO here is down. I see my pre-market XOP, well, XOP, XLE up a little flat. I didn't know what the reaction was going to be actually to oil with every time you get storms over there in the Gulf, we get half the production of fuel over there for the US comes from that area. So whenever they have disruptions, I've lived through many of those where you get gas hikes whenever hurricanes hit that area for disruptions of supply. All right, so Facebook, you know, we talked about whether yesterday was a wide range ending, and I said I didn't know. I like wide range endings when they're more extended, not coming out of a base. But I surely wouldn't be buying Facebook here, that's for sure. Cream we talked about. Piton, I posted as a put spread candidate. Oh wow, 72 is way up here. All right, for a directional, we need a pullback, but let's keep an eye on that. I'm going to put that here, Piton. $13, bearish gap here. It could go lower. Let's watch 30-minute low, GNMK. SP solar power, solar stock, gapping down to $11 here. It's gapping under this base, so that's very bearish gap. But you got this support here, this resistance. I'm not sure what it's going to do. There's no great setup right now. Alex, 5 minute on what? McGraw, Boeing put spread. That's still too sloppy for me. It's in a trading range. I don't know. But YouTube asked about airlines. Jets, it's popping here pre-market. I just have a 95% intelligent reason that jets are popping here is because whatever Powell said. Yeah, I'm gonna have to let me turn him on. All right, Steve. I guess Steve Leeson is summarizing. Nasty gap, Holex. Nasty gap, but it's a big one out here in no man's land. So my bias, I would have no idea. You got to put it in a thumbnail here and see where buyers and sellers want to step up. Flidium, this is actually what we call a bear island reversal. You got this candlestick up here that gapped up all by his lonesome. So that's a bearish pattern. A pen here. Bear call credit spread candidate over all this resistance, because eyeballing it here is 57.50. I got slow data. There are no 57.50s. 57s are only 22 cents for tomorrow. We'll come back to it for a pass if we decide to go out. New record high, imagine that.